I've known Professor Dasher for almost a decade now. I started my career as a VC in the Valley in 2005, late 2004, early 2005, and then we moved. My wife and I moved to China, in Shanghai, in middle of 2005. So my two kids were born in Shanghai. We moved back to the Bay Area in 2013. While I was in China, I was for full 8 years on the ground, made about 15 investments. And most famous one is Xiaomi, which is now the largest smartphone manufacturer and designer in China. When I first invested in Xiaomi, it was in 2010, when there were just 3 guys and a very crazy idea. And today, the valuation is supposedly around $46 billion US. It took them 5 years to get there. And the revenue last year was over 12 billion. And so it was, I was very lucky and fortunate to see how internet in China took off. Some of you in the audience heard this part of my talk before. When I went to China in 2005, Chinese internet users for the entire country was roughly about 100 million people on broadband. And now it's over 700 million people on PC broadband, another 650 million on smartphone. So a lot of changes happened over this 10-year period. When I went to China, there was this little company called Alibaba that just launched a cash-burning website called Taobao for 2 years. And eBay was supposed to be this big giant that was going to be very serious about China, invest a lot of money, and crush this little company. GGV happened to become an investor in Alibaba in 2003. Valuation of the company back then was less than 200 million. And does anyone know what's the market cap of Alibaba today? Take a guess. $150 billion US. They did over $400 billion in GMV last year. So from 170 million when GGV invested in 2003 to 150 billion now. So it took them 12, 13 years and over 1,000x. Over the same time, Google grew their valuation from roughly about 80, 90 billion to 300 billion, so 3x for Google over the same time period. That's just how much has happened and changed in China over this 10-year period. When Yahoo and Jerry Yang invested in Alibaba in 2005, the valuation of Alibaba was 5 billion. Everyone on Sun Hill Road thought these Chinese guys are crazy. No profit, extremely high valuation. Another company from China was listed on NASDAQ in 2005. Its name is called Baidu. And in 2004, Baidu had a very small revenue base. Does anyone know how big a revenue base Baidu had when it went public? $11 million in 2004. And what was the valuation of Baidu? 5 billion. So another sign that China is heated, China is crazy, these VCs are inexperienced, they don't know what they're doing. These entrepreneurs are not ready to take on the challenge of managing a $5 billion company. What is the valuation of Baidu today on NASDAQ? Does anyone know? Take a guess. Not that big. About 70 billion. So it went from 5 billion to 70 billion in a span of about 10 years. Another company from China got listed in 2014. This time it's in the Hong Kong Stock Exchange. And that company is called Tencent. Back then, they were doing stuff, it's called QQ on PC, and you play QQ like a AOL Messenger or ICQ. Does anybody remember ICQ here? There you go. So they used what we call CICQ, and they got sued for IP infringement. So it changed CICQ to QQ. The valuation of QQ back then was roughly 3.5 billion. A lot of people thought that just overvalued. And the market cap of Tencent today is about 200 billion. So these are based on real numbers, and the revenue of Tencent and the net income of Tencent today pretty much is in a similar size as Facebook. Facebook has the rest of the world. Tencent really only has China, yet in terms of market cap, revenue, and net income, they're very comparable. So 10 years ago, if anyone said the number one internet company from China can be similar in size of a number one internet company from US that has the rest of the world, everyone will laugh, including those of us who were on the ground. None of us thought that Alibaba and Taobao will be around $150, $200 million in valuation today. So the kind of changes that we have seen over the last 10 years in China is dramatic. What does that mean? That means that the lesson that China gone through, in my mind, is not China specific. Any country where you have a favorable demographics kind of trends, where there are more people who are young users, and internet penetration rate is rising, and urbanization is also happening, GDP is growing, then a country will go through similar challenges and opportunities that China presented. So in my previous talk, I've always said that India is a country worth looking at because over the next 10, 15, 20 years, it will go through similar kind of pains and opportunities that China had gone through. The solution to solve those problems may be different, but the principle behind it will be very comparable. The topic today is China Entrepreneurship Update. And it's specifically, Professor Dasher want to hear about how, as the economy slows down, what does that mean? So this is actually one of an internal document that we shared at our quarterly offsite amongst the general partners in January. So as the stock market goes into an extremely volatile time period, and in January and first half of February, a lot of tech companies in the US that's listed on NASDAQ and NYSE, the valuation went down by anywhere between 30% to 50%. So in that kind of market, when some of the people are panicking, and yet these venture-backed companies are still burning cash and growing, what does that mean to our portfolio? So these were the issues that we thought about. Should we be more aggressive or more cautious during this time? We went through downturns in 2000 as well as in 2008, 2009, and the recent correction in 2015 and 2016. So being through this, it's our third time now. And some of us, like myself, went through the Asian currency crisis in 1997, 98 as a very young venture investor. So for some of us, it's the fourth time we've gone through it. And every time you emerge from this kind of period of uncertainty, it's those who were very calm, very thoughtful about what they're supposed to do, ends up investing more, backing better companies that had an easier time recruiting people, had an easier time raising money because they are more differentiated, and had a field where they're less competitive environment because not a lot of crazy money went into funding their competitors. So contrary to what people may believe, whenever there's market uncertainty, whether it's micro or financial market related, it actually is good for us and the startups that are more experienced to go through this period, become stronger, and once the funding environment gets better, they emerge, become a lot stronger in process. Okay, so this is the sort of the size of the major regions around the world and their growth rate. So looking at China as a single country, it has 11 trillion in GDP. When I went to China in 2005, GDP was roughly around 1 trillion. So in span, it's 11x'd. And it's amazing what a country had gone through. And this is GDP growth for China versus the US. When I moved to China in 2005, is actually when China's growth peaked at around 10%, 12%-ish. In the last 10 years, China growth has actually continued to go down. And yet the numbers I gave you for Alibaba, Baidu, and Tencent, those $5 billion valuations were roughly around here at the peak of China's GDP growth. So how could GDP growth be slowing down, yet these internet companies grew from $5 billion to anywhere between 80 to $200 billion valuation? How could the data for macro be so different from our experience on the ground watching these internet companies grow?
Maybe because a lot of China's growth was in commodities exports, whereas, and those have been going down. We've all heard about the price of oil recently.
Yeah.
Whereas internet is still, increasing, more users, more money being spent on e-commerce, et cetera.
Yep. I mean, that's exactly the answer. And why does that happen? If for anyone who shopped in China in 2005 in a offline retail store, as soon as you bought the stuff, that stuff's yours. Even before you leave the department store, you can't return it. And the store clerks inside these stores, their attitude is that I'm running a state-owned enterprise. You're lucky you can buy something from me. Because, 10 years ago, it's controlled economy. You can't even buy it, even if you have money, because you don't have the piao, the ticket to buy. So in that kind of environment, Taobao was born, and Taobao makes it free. You can sell anything you want. They won't charge you for any commission. If you want to advertise and get more business, you have to pay, but otherwise it's free. So in a very short of a time, a lot of people start selling, become merchants on Taobao. And once you do that, a lot of people are selling similar stuff. So how do you compete? On price and on service. So if you buy something from Taobao, you don't like it, within 7 days you can return it. And your money stays in Alipay escrow service, you can get your money back. Not a problem. So the service quality level is actually much better online than offline in 2005. So while GDP was slowing down, most of GDP back then was driven by government infrastructure spending, commodities export, and so forth. As that was happening, China internet sector started, and they were providing better service at cheaper prices than the offline world. So all the VC who went from here who went to China in 2005 and saw, hey, there's no FedEx here, there's no UPS here, there's no DHL here. So how are you going to ship stuff as an e-commerce player? There's no PayPal, there's no credit cards. So how do you pay as a consumer if you want to buy anything? So you go to the warehouses, is not as well managed, not as automated as what Amazon has. So how could e-commerce take off in China? Everything that made it work in the US, you don't see it in China. So if you go to a new market and use the same lens from the market that you were in, it's very easy to like same data points and draw the wrong conclusion. For those of us on the ground, realize that, hey, sure, the delivery system is not great. It takes 2 weeks to get it. But if you're living in a smaller city in China, there are not many offline stores around you. You can't even buy the stuff. So you're okay to wait for 2 weeks until the good is shipped to you. So in that process, consumers become more tolerant of initial mishaps that startups may have. But as long as getting better service overall and getting stuff that they cannot get elsewhere, they're willing to put up with that. And over time, the service level increased, things got better, and consumers stay with it. So what I remember when my wife started purchasing on Taobao, she'd probably buy on Taobao once a month. By the time we were leaving in China in 2013, she was buying once a day. So from once a month to once a day, huge, huge, huge difference. And she got an email back in 2012, and it said that, hi, Mrs. Tung, you have been with us for 7 years now. Your first baby was born in 2007, and second one is just born, and we want to make sure we take care of you, and here are some coupons that you can use. So my wife never told them that she had 2 babies, just from what she was buying on Taobao. Taobao figured that out and was able to service that. No offline retailer in China can ever do that, ever bother to do that. So that is the kind of difference, kind of a little spooky, but at the same time, it was interesting to see how the innovations were happening at a much more rapid rate for online players than is for offline. And that, more importantly than the macro, determined who's a winner, who's a loser, who will grow, who wouldn't in China. So despite all the negative news that we read about on Wall Street Journal and New York Times about China, that's what was happening. And it was very interesting to see these internet players grow bigger and stronger even when the economy was slowing down. So another way of looking at it, China's GDP back in early 2000s was at 1 trillion, growing at 10% a year, and a peak around 2007, within a year and a half after I got there. Yet even at a slower growth rate, it can get to 11 trillion, which is obviously a huge, huge number. If we compare that to, let's see, I had a chart about, okay, I don't have that chart here, but if we compare the size of Chinese economy to India, India is 2 trillion, China is 11 trillion. So, and this is, the red bar is the size of growth, that's size of economy that's added to an existing economy every year. So in 2015, China added about 800 billion. Despite a slower growth rate, it added about 800 billion in GDP. So pretty much in every 2.5 years, it creates a new India.
I also want to mention that to everybody here, if you were here last week, we were using PPP calculations for GDP. This is at the official exchange rate. Right, at the official exchange rate, China is now an $11 billion economy. At PPP, it's about 18 billion. Yeah. So this is, yeah.
So now, does that mean that India is so far behind China that it's not worth looking at? Absolutely not. That's not a point I'm making. Because back in 2000 to 2005, you can look at the same stats between China and US and feel China is way behind US and therefore not worth investing. The point is that China, despite the slow growth rate, is impressive, and that India, over the next 10 to 15 years, will definitely be interesting. And some of the lessons that China had will be relevant for India. The reason I'm so confident about that is that back in 2011, a group of young entrepreneurs, 2 of them in particular, came from India to look at China. They met some of the e-commerce players in China. They started off as a Groupon clone in India, and they were thinking about how to evolve their model. And after we discussed what Tmall, JD, Taobao have done, they went back and changed their business model from Groupon to Tmall, which means that they build a marketplace, attract the brands to sell on their marketplace. And the little company is called Snapdeal. For anyone who spent time in India, it is now number 2 and number 3 e-commerce player in India. Valuation with the recent Alibaba and Foxconn and SoftBank investment is about 4.5 billion. And they came to us back in 2011, 2012. I had a great time talking to them, and I put in a little bit of personal money back then. And the growth has been amazing. So the issues that they were facing in India was very similar to what Chinese companies have gone through. And so the lessons and the insights were highly relevant. And it's just fascinating to see these countries evolve, each one at a much faster pace than the previous one. Labor market in China. There were a lot of blue-collar workers that were focused on working in the manufacturing sector. As the economy slows down, these people are thinking about doing some different things. Some of them are moving into the service sector. A lot of them start driving for Uber and Didi in China. And over time, a big portion of that need to be redeployed into other parts of Chinese economy. And the market forces should be relied upon to do that. And the government is hastening that process with more subsidies and providing incentives for tech companies to hire more people. So over time, that issue needs to be solved. In the meantime, a lot of them spend time playing online games in cafes and so forth. So sometimes we make a joke that the reason online gaming is so popular in China is that it keeps people who are unemployed entertained and provide more stability in China. But one thing that is worrying is that the demographics, the ratio of older citizens in China is increasing. And because of the one-child policy, over the next 20 years, you will see a lot more older people than is younger people. So when that happens, China will go through similar pains that Japan had gone through in the last 10 to 20 years. So unless China increases efficiency, unless the internet side of things become more dominant portion of growth driver, unless Chinese companies learn to expand overseas and become more globalized companies, the growth will eventually impact existing businesses. So how China improves efficiency and leveraging power of IT to do more over time will be very telling. And this is why even the Chinese government realized that Internet Plus is a strategy that must adopt, that it needs the help of the Chinese internet players to share their lessons with those who are in the offline world and need to know how to leverage mobile internet to become more efficient themselves. So over the next 10-year period, I think it will be very interesting to see if Chinese economy can go through the same transition that the US went through in 2000. Back in 2000, most of the e-commerce companies in the US, with the exception of Amazon and Zappos, kind of died out. And a lot of companies that couldn't get funding, that talent went into the offline world in the US and become to building online businesses for a lot of offline retailers. If you look at the names of the top 100 online retailers in the US, 90% of them have offline business that pick up smart people from 2000 and infuse that talent to do interesting things. In China, the offline players are not as equipped to absorb that talent. So how will that evolve over the next 10 years? Will it buck the trend and do something different? Will be very interesting, because these are a lot of offline players in China are running into situations where there's just not much traffic in the mall. People are shopping online more. It's close. A lot of stores were closing down. So how do you deal with that when you don't have the internet know-how and you've been doing the same business for the last 20 years and now the world has just changed very quickly on you? Another thing that worries a lot of people around the world about China is the size of the Chinese debt. In 2008, 2009, a lot of municipal governments in China end up getting subsidy from Chinese government in order to provide jobs and keep the economy growing during the financial crisis caused by Wall Street. Has anybody seen the movie The Big Short? Okay, some people. Fantastic movie. It's a movie that's must watch. For everyone that criticize corruption in China, India, Japan, you should definitely see that movie, because it's corruption's everywhere, and the cynicism, it's not particular to one region of the world. And during that time period, China spent so much money and let the municipal government borrow so much debt. Now there's $16 trillion of debt in China. And to service that will require the internet companies and private enterprises in China grow at the faster rate to overcome the slowdown or negative growth rate of some of the state-owned enterprises. Otherwise, there wouldn't be as much surplus for the government to pay off this debt. they can continue to print money, which is what the U.S. did over the last 5, 6, 7 years. So will we see China opening renminbi up more, or would it move more slowly as to try to contain and work through this problem in China? My own prediction is that China will take 2 steps forward, 1 step back in terms of making renminbi more of a currency around the world. Because when you open it up, it's harder to contain this issue. I think over time this problem will be solved in the next 10 years, but the road to get there could be more volatile than has been than before. When you've compared that 16 trillion dollar number for Chinese debt, it is higher than what Japan went through in the 1990s. So actually what Japan has gone through with pollution in 1960s and fast growth in the 70s and 80s, and then the stagnation in the 1990s and 2000s is actually lessons that a lot of Chinese scholars and government officials spend a lot of time thinking and debating and see how would this change. I think the one big difference between Japan and China is the role of internet and internet-generated growth. But is that enough? Only time will tell. Coming out of the financial crisis in 2010, few thought that U.S. economy would be in the best shape in the world by 2015. I know back then a lot of people in China thought that the U.S. way of doing things is out the door. And I think it does help that your currency is the world's most dominant currency, and you can continue to print money to get out of your problem. But at the same time, the rest of the world just not as we're not as growing as fast, with the exception of China and India, as U.S. And also growth from IT, especially from Silicon Valley, plays a huge role in how U.S. has rebounded. Sure, the job creation hasn't been as big, but the fact that most of the companies can still grow and leveraging IT to continue to build bigger and more interesting businesses is the reason why U.S. can get out of these situations better than what people predicted. I think recently when DeepMind had this Go game contest in Seoul, Korea, I don't know if anybody here has seen the matches. There were 5 matches total. In the U.S., it didn't create much of anything. But in China, it was shocking to a lot of people, especially to the government officials and to people in the IT sector. Because this is a machine that 2 years ago didn't know much about Go. And after 1 million hours of practicing and playing it, you can beat a #1 player in this particular category. So there were a lot of comparison with what was happening now to what was happening in the 19th century. When during that time, China was forced to open up and realized that technology played such a big role in changing the society over the last 200 years. So what does this mean for us today? So I think over the next 10 years, you will see China going through developments in AI and increased investments in IT spending in a way that's almost unprecedented. Because the last time China went through this process was 1991 when U.S. went into Kuwait in Iraq. And when the entire, all the battles, you see it on CNN, it shocked the military in China. Because now you actually can have Star Wars. You can actually have all these machines, press a button, and enemies destroyed. And that, all the people's war tactics just don't work anymore. So all the recent purgings and changes in the Chinese government, I think is a response towards China getting ready just in case something happens over the next 5 to 10 years. I think one thing that worries me is the role of Japan in this. Historically, in Japanese history, every time there's a conflict or a brewing of conflict between Japan and China, usually Japan has thought about it, planned it, so it doesn't just accidentally do something. And it's going to be very interesting to see how the Sino-Japanese relationship will evolve over the next 5 to 10 years. This is a number that I thought was very shocking to me. Despite all the exports from China into the US, in terms of US GDP, less than 1% comes from China. US exports less than 1% of GDP to China and import less than 3% of GDP from China. And I thought that was, if it's true, it just means that all the products that people buy that's manufactured in China came to the US extremely cheap. So any markup you see is quite profitable for the retailers and the brands themselves, because that number just seems extremely low to me. And this is the reason why Foxconn and a lot of people in China complain that with all the pollution China has caused itself, it didn't make that much money from all the manufacturing. So an upgrade of its services and innovations over time is absolutely needed in order to get more out of the pain that China's going through. You go to China today, you go to Beijing, you go to Shanghai, you go to Shenzhen, the quality of air, the pollution level is very similar to what London gone through in the 1950s and also what Tokyo went through in the 1960s. And the Chinese are keenly aware of it needs to do something or else that the people won't be able to stand that for an extended period of time. So despite that, what is interesting for me working in China is that the startups are much hungrier than startups here in the US. A lot of startups here do start because they like it, it's fun. So you see a lot of people who are product enthusiasts to build product that make themselves happy or make their friends happy. So it's something's fun. If it's not fun, they will do something else. In China, it's we joke around. It's like solving a mathematical equation. You know that company is big in the U.S. Therefore, if I want to replicate something similar in China, here's what I need to do to make it work for the Chinese environment. And to make that work, here's how much money and what kind of people I need to recruit. Therefore, solving that complex equation, it comes down to this is what I need to do. Here are the milestones. And so solve something that's very methodical. So when I invest in Xiaomi, I go to the office to visit them in 2010. I can go there 11 o'clock at night, and 90% of the 100 people will still be working there. And the model used to be 12, 12, 7, working 12 hours a day, and 7 days a week. Now it has changed to 996, 9 a.m. to 9 p.m., 6 days a week. But if you go there on Sunday, you still see people there. They realize because it's very clear what the target is, they know why they need to work that hard to get there. And it's very different than you go to a Google or a Apple or Facebook here in the Valley. Now, I think over the next 10 years, this will change as more Chinese come here, stay here, or go back to work in China, and more Chinese companies learn to go abroad and globalize. It will be different over time. But right now, it's just very interesting to see startups behave very differently here versus in China. And so in that process, if someone, whether it's a VC or a startup, can combine lessons from both the US market and the Chinese market, they're going to be much better prepared to tackle a global opportunity. In the US, there are a lot more innovations. At the same time, the failure rate is much higher, which is okay. But the few things that do work ends up making a huge impact. Has anyone heard of a company called Y Combinator, YC? Okay. How many portfolio does YC have? Portfolio companies does YC have today?
About 670, 700, somewhere around there, right?
About 1,000.
Yeah.
Slightly over 1,000. And out of 1,000, they all invest very early. how many companies do you think has reached about $100 million US in valuation? Take a guess.
10 or 11.
Higher. But as of last year, it's about 60.
Okay.
So it's 6%.
Because I remember Gary Tung came by and spoke a couple of years ago. And
That's a couple years ago, that's right. And they have invested a lot more companies since.
well, and he pointed out that 60% of their capital gain had come from about 3 companies.
That's right. That's exactly
So
right.
it's an extremely steep
Right.
curve.
So out of the 6% of companies that reach only $100 million in valuation, the number of companies that reach about $1 billion in valuation has now increased to about 10, 11. And that number will continue to grow. But it's just very interesting to see that with all the investments made, only few companies can drive the return. And it makes sense because people do stuff for fun, they really love it, and there's a founder and product fit. Now, if there's a product market fit as well, in which the stuff they do ends up being a very big thing, like an Airbnb or Uber, then it becomes a huge company because you have innovation, you have people really intensely interested in what they're doing, and it's a big problem. Therefore, it can grow, become a big company. In China, it's different. It's a lot more solving a mathematical equation. So it is just very interesting to see the contrasting approach. So if you have a team that know how to do both well, the chance of building something dramatic and interesting and world-changing is a lot higher. So I think the people who are in Stanford, if you can recruit a sort of multinational team with people, United Nations team from all over the world, offering different perspectives, and yet you're willing to work hard and be very driven, and you want to do something you absolutely love, you now have 2 billion smartphones worldwide, 3 billion smart devices, everything's on the internet. The kind of growth that's possible on a global basis would be amazing. And that's why we're investing in Airbnb, in Slack. We invested in companies like Wish that took the Chinese business model of recruiting merchants online to sell to the rest of the world to be here and then have a much better UI that's Americanized to sell to users here and in Europe. And in a span of 2 years, their GMV, gross merchandise value per day, went from 50,000 to now 50,000 a day to tens of millions a day. So went from 15 million a year to billions, and takes about only 2 years to get there. And that growth is not possible unless you have mobile internet penetration on a worldwide basis. So my advice to anyone who's interested in doing startup is that don't be afraid to try something that you like, but keep in mind that if you can build a team that comes from all over the world, the things that you can do over the next 5 to 10 years will be absolutely amazing. And when I saw China went through that kind of transformation in the 10-year period I was there, and that's still going through, it's mind-boggling what the power of IT and the internet could cost. Do you have any questions for me? Yes.
Why do you think China will further liberalize the yuan, the renminbi? We're talking about its massive debt right now.
Right. I think if China open up too much, it makes it easier for something like a big short to happen, for people to short your things. The more open you are, more likely people can find ways to bet against your currency and so forth. So it wants to liberalize at a slower pace. And the benefit of liberalizing is that it helps to have people use your currency so that they depend on you as well and increase your influence. And you don't have all the foreign exchange reserve you earn don't have to always be stuck in US dollars, which is depreciating as US prints more money. So having your currency become more widely accepted is definitely useful. However, if you do that, you open up too fast, you also makes yourself more vulnerable to external shocks as well. And hedge funds have done that well with Southeast Asian currencies and British pound in the 1992 and the 1990s. So it is a process that central government in Beijing manage that very carefully.
Excuse me, I've got a bad cold, so my voice is a little bit crackly. What's going on with corporate venture investing by Chinese corporates? You see Baidu and Alibaba buy something here and in China and India every once in a while.
Right.
But does anybody have a systematic and organized corporate venture investing program?
They have a very systematic corporate venture program. That program is just not as Americanized to the point of making people here feel they know what they're doing. But in China, they're actually extremely well run. Baidu, Tencent, Ali all have such programs, and they actively invest and buy companies in China, to the point that a lot of Chinese entrepreneurs worry that BAT is everywhere, Baidu, Alibaba, Tencent is everywhere. Where's room for innovation for startups to emerge? Yeah.
I saw a hand in the back.
I got two questions. The first one is how steadily will China keep growing in the incoming decades?
Sorry, what's your first question?
How steadily will China keep growing? The reason why I ask that is because if you think about Chinese economy from a social welfare point of view, the population pyramid is extremely unbalanced.
Right.
So especially for young people like our age, we got 4 parents to take care of and also 2 kids.
Right.
So, and especially China is facing the debt problem already. So my question is, where do those money come from? So I imagine within 10 or 20 years, the taxation gonna increase really rapidly, or some other things will happen because they need to take measure to solve this problem. So I really see this issue can drag down Chinese economy. And I want to hear your opinion. How do you?
I think the picture that you paint is very bleak, and the saving grace come from a couple areas. One, this is the reason why people born after the 1950s and 60s and 70s don't spend as much. They save a lot. The saving rate in China is over 40%, precisely for that problem. So I think your parents are very careful about their money for that kind of reason, because they know they cannot depend on this generation to support them. That's one. And number two, I think, like I said earlier, if IT plays a bigger role and there's more automation, there's more innovations, and Chinese companies become a lot more efficient, then over time, in theory, they should be able to generate bigger revenue and profits that have more contribution to taxes, so that the people won't be taxed as much. So either is the corporation paying more taxes, or people have to pay more taxes. So if you have SOEs that keep on sucking up a lot of government resources, yet they don't grow, they don't provide good jobs, then over time, the people will have to bear more of the burden. So how do you manage that and have internet-enabled businesses, private enterprises, drive more of economic growth is absolutely critical. That ratio, SOEs used to account for 2/3 of Chinese economy. Now it's only less than 50%. So the trend is good, but how fast would evolve in the next 10 years is very important. That's why there's a lot of hope on Xi Jinping doing the right thing beyond anti-corruption campaigns. Because after that, you have to somehow foster more innovations. So putting more money into VCs, putting more money to get startups to get formed and try and grow are all things that the Chinese government is doing.
My second question is, how robust is the VC market in China? I just heard so many, for example, Stanford graduates go back to China to do startups and got money easily from VCs.
Right.
Even got money from those who know nothing about investment.
Right.
How do you see this market?
So
I think-
actually, Hans, we're kind of at an inflection point in your talk, right? You had the PowerPoint that you haven't looked at, we
Right.
haven't looked at yet. I think I saw some VC slides in that, didn't I?
Right. We can go through that. How much time do we have?
We have until 5:50,
Okay.
so you have plenty of time.
I'll
But
answer that question.
we can also go interactive whenever you want to.
Yeah, interaction is probably better. Chinese VC market is number 2 in the world, and I think that what you see with Stanford is more exception to the rule. I think there's, rightly or wrongly, there's a fascination with Stanford alum and Stanford entrepreneurs. So even if you're an inexperienced Stanford entrepreneur, you're very smart, you can raise money from VC the first time. But it doesn't mean you will raise money the second time. Because the VCs are, in general, the ones that have been investing for a while, are pretty smart. So they will try you the first time with $1 million, $2 million. If it doesn't work out, then it's a different story. But I think that we backed several Stanford entrepreneurs. One of them is Xiaohongshu, started by Mao Wenchao, Stanford GSB. He went back to China in 2013 and started Little Red Book, and the company has done very well. And he has never done startup before. And so, but you look at him, he is amazingly hard worker. Just watch him, how he has changed over the last 3 years in terms of his growth is absolutely impressive. And you can call him 1 o'clock in the morning and he's awake, thinking, working. So the price he paid is heavy, but he loves it. So if someone here who doesn't take that opportunity seriously, I think it's very unfortunate, because being a Stanford alum carries a lot of weight in China. It opens a lot of doors, and if the people don't take advantage of that, it's pretty sad. Yeah.
The Harvard Business School Alumni Association had a webinar last week where a retired partner of Venrock, a man named Ray Rothrock,
Yes.
who was in their Silicon Valley office for 28 years, was talking about the pitch. You know, how do you put together a strong pitch for when entrepreneurs come into you guys? Which, you know, he gave a really good presentation on that.
Yeah.
But along the way, he mentioned almost as an afterthought that looking at companies like Google, which I guess Venrock was a private investor in, their real value creation and the money has been made after they go public rather than when they're private. Now, VCs did very well out of companies like Google,
Yeah.
but he mentioned that the real value creation was after they went public.
Right.
Now, have you looked at that for something like Baidu or Tencent or
Yeah.
Alibaba?
Maybe I spoke too fast. I mentioned that in my talk earlier. When after Google went public to the Google valuation today, the ratio, the multiple growth is roughly 5x. So when Google went public, the valuation was roughly around 50, 60 billion. Now it's 400 billion. So it's about 7x. Baidu went public. Within the first day, the stock price tripled, and ends the day trading about 5 billion. And the valuation of Baidu today is 80 billion. So it went up by 13x during that time frame. And for Alibaba is less apparent. Alibaba waited until 2014 when they went public. And after went public, the valuation and valuation is today, 2 years later, is roughly the same. Tencent went public on a Hong Kong Stock Exchange in 2014. Valuation back to that time about 3 billion. And the valuation of Tencent today is roughly 200 billion. So it went up by a lot, much more so than Google. So you have the whole gamut. And the Tencent employee will tell you they regret selling so early, because after the company went public, they thought they were done, and they sold a lot of shares at that time. And then, whereas in Ali, a lot of the employees were stuck with their stock. They end up making a lot of money for themselves as a result. So both sides is true, and there's no good answer as to what will be the trend going forward. But it is pretty clear that companies are taking longer to go IPO just because the stock market is more skeptical of how well you'll perform after IPO. You look at all the Chinese IPOs in the US, 70-80% of them are trading below IPO price. So when that happens, it's better if the company stays longer and be more ready before they go public.
There was a lot of fraud in that too.
When we say fraud, it just it is not easy to build a sustainable business over time. So if the bankers are good at pushing stuff, selling hope back then is easy to get a stock IPO when they shouldn't have, or should have stayed longer. And so over time, people get learn the lessons and become more thoughtful and experienced at figuring out what makes sense. Yeah.
So are we going to go to Q&A?
Yeah.
Is this is what's happening? Okay, all right, just want to make sure.
That's fine.
Okay, go ahead. I saw a couple of hands back here in the middle.
For expat entrepreneurs in China, what are some like really unique differences that going in you probably wouldn't know?
For entrepreneur who's here to go back to China, the level of intensity is a lot higher there than here. Here you can do stuff for fun. It doesn't work, it's okay, try something else. In China, people are a lot more serious. And you hear about cloning, about copying, or people trying to, competitors sabotaging you. It does happen. I have had companies that they sell something, and the competitor will buy it and return it, ask for a refund. Just giving you a lot of headache. Those kind of stuff do happen in China. So to be a successful entrepreneur in China, you almost have to be a lot more aggressive and have very thick skin, and have friends that you can count on to help you when someone mounts a negative smear campaign against you online. So
Can I follow up with that one? Because I want to ask you a question that follows that question.
sure.
It really used to be the case that when somebody would see an interesting business idea, there would be dozens of companies in China.
It's sold that way.
Basically on the same idea.
Right.
But are you seeing the impact of the new big successful companies, Baidu, Alibaba, Tencent? Are companies kind of avoiding their area? Are startups avoiding their
Yes.
service areas?
Absolutely.
So they're actually creating a space around them
Yes.
that is not being covered. They're not being copied.
Well, when Xiaomi started, Baidu and Tencent and Ali, they all discussed whether they should have their own smartphone.
Yeah.
And for one reason or the other, either they didn't do it or the effort was not as successful.
Yeah.
So there are still ways to build companies outside the reach of the big players, but you have to be a lot more aggressive at making that happen. And the BATs do invest more than before. The corporate venturing, corporate investing arm is much stronger. These guys probably invest 40 to 50 companies a year. So they are much more aggressive at figuring out how to direct their traffic to different players, startups, in order to monetize it better. So there is a way you can work with them, but you have to be strong on your own before you can do that.
Yeah. Philip, I saw your hand.
Sure, so I have two questions. I'll try to make them quick. The first is, when people try to explain why Silicon Valley is this hub of entrepreneurship in the States, one of the things that they'll look to is the fact that non-compete agreements don't really get enforced in California. So there's a lot of employee mobility, and people can like leave their jobs and go do something very similar with like low friction.
Right.
Aside from China having recently gone from a very control economy to more liberal, what sort of reasons do you see that explain this just like outrageous explosion of entrepreneurship?
I think the offline world is so inefficient that if you do something pretty well online, you have a chance to grow. I think to me that's the most important reason. The second is that there were a lot of Chinese that were in the U.S. A lot of them were educated here or MIT, and they went back early when internet would just start to happen here, and they take those ideas to China, and over a 5, 6, 7 year period, were able to build something. And once you have a successful example, it changed people's perspective. The founder of Baidu went to Peking University in China. Among his classmates, he wasn't ranked near the top. So if you went to school with Robin Li, Li and Hong, and you see him being worth $10 billion, it changed your perspective that what am I doing here? I should be doing my own startup. So that kind of success begets more people to say, if he can do it, I can do it too. And I think when that happens, it's easier to attract VC funding to follow, because once you have success, you're willing to invest more and take more risk. I know back in 2003, a lot of startups were being sold. Some startups were being sold to Yahoo, to eBay, to Amazon. The people who didn't sell, the valuation went up by 10x, 20x, 30x. So the people who sold, it's like, shoot, why am I still stuck in a big company? I should go on and start my next company. So that helped to start a lot of entrepreneurship in China in a way you don't see it elsewhere. And fundamentally, China is such a huge market with so many users growing that if you do exactly the same thing in Taiwan and Singapore, you just don't get the same impact.
Two little sub-questions about GGV Capital itself, because it's very interesting that you are sort of handling the US and China simultaneously.
Yeah.
The first is, where are most of your LPs from? The US or
A lot
China?
of people ask us that question. It's actually mostly from US, and it's all US dollars. And we have LPs in Singapore and Hong Kong, but it's also all USD. We actually don't have a lot of China-based investors. We have a separate R&B fund that takes capital from Chinese sources, and that can be a lot smaller in terms of asset under management.
Yeah, and what is AUM?
Asset under management, how much money you manage.
No, what's
What is our total AUM? It is now, after an announcement this morning, about 4 billion.
And then, what are some challenges to venture investing in China that you don't think exist, or at least not in the same form in the U.S.?
A lot of people think that Silicon Valley is the most competitive VC market in the world. I actually think that China is tougher. It just to get a deal signed, you'll see people going to entrepreneurs' house, camp out, 10 o'clock at night, try to get or corner an entrepreneur in the office and won't let him leave until the signature is signed. Here it's a lot more civilized.
So hold on a second. Is that because there's a lot of money chasing a relatively small number of
just,
deals? What's the?
Just tougher.
Just tough.
Yeah.
Okay.
Very aggressive. The first time I moved to China in 2005, the first rainy day that I encountered, I was walking on the street trying to get a taxi, and someone who's half my size, 1/3 my weight, beat me into a taxi. So, and that girl did not, she was tough, and that happens when you're in a country where you have so many people with going through a high school examination, and every step of the way you have to take tasks in order to get to the next level. After a while, the ones that really make it, in terms of intensity and aggressiveness, is off the charts.
So in what way are you particularly entrepreneur-friendly that got you that award?
I think the fact that I'm here sharing all the secrets, when most people wouldn't, and I don't mind, make less if you can make more, makes it easier for people to work with me.
So while I've got you here, I really want to ask some questions. Are you seeing any kind of changes in the demographics of who's becoming an entrepreneur, or is it still
Yes,
all across
it is definitely
the board?
changing. It used to be older people, people my age will be entrepreneur. Now you see a lot of younger people born after 1990.
Are they going straight out of university, or are they mostly going to work somewhere first?
Some, but usually it's people who have worked for a few years before they start something on their own.
Okay, and also in
And the
regard to
reason I
this-
think the reason now people who are younger can do that and start their own company, that's because there's enough of consumers born after 1990 that grew up with smartphone who shop and behave differently. They worry less about how much money they have to save to support their 4 parents. So that's why it's changing. And make it easier for young entrepreneurs to succeed in China.
Okay. The other thing, so I used to do this pretty regularly, and I haven't done it in a few years. Whenever I would go around in China, I would ask random people, what do you think it takes to make a good entrepreneur, a successful business person?
Right.
And, overwhelmingly, it used to come back that the answer was, it's who you know. Now,
Definitely not.
Not anymore. So that's
No,
a
it
change.
depends on what sector you are.
Yeah, right.
Internet sector is
Yeah.
definitely not who you know. And that's the beautiful part of doing this in China was that if you are good at what you do and you're a very good product manager, like WeChat came out of Tencent. And this group, led by Alan Zhang, they used to build the best webmail in China called Foxmail. And it was acquired by Tencent for very low valuation, less than $100 million. And he continued to refine his product, but he couldn't monetize a webmail product. And in 2011, that people in China saw how Kick Messenger and WhatsApp was kind of taking off in the US in emerging markets. And a lot of people were trying to come up with mobile messenger. Valuation of Tencent at that point in time was $50 billion. Now with WeChat being the second most popular mobile messaging app worldwide, mostly in Asia, especially in China, valuation of Tencent is $200 billion. So the new $150 billion, you can really attribute to WeChat being the most dominant IM in China.
Yeah.
And that product is amazingly designed.
Yeah.
Alan Zhang doesn't know any government official. Alan Zhang doesn't know anybody who give him favors. Alan Zhang did just build the best product out there.
Great. There's a couple of more things I wanted, then I'll turn it back over to the floor. I was really intrigued with your point about the debt in China, even being higher than the debt was in Japan in the early 90s before their crash. You didn't see what I said last week, did you? You didn't
No.
see okay, because I basically said the same thing.
I'm not surprised.
And one of the things that I said that led to a question in the class is that if China's not careful, you'll see a bifurcation
Yes.
into some companies that are strong, globally competitive companies, and then another sector to the economy
Yep.
that's going to be weaker and probably protected.
Okay.
And with the SOEs behaving as SOEs tend to do, how do you see that situation? Do you think China will be able to become more efficient, like you're saying, and more
I think you
globally active?
definitely will see bifurcation. And the laggards probably will be forced to consolidate, become bigger, and through that process, rationalize in a way to become more efficient. It's hard to say how that segment of the economy will perform. Will China produce as many worldwide recognizable brands as Japan and Korea is TBD. But I think the benefit that China had that Japan doesn't have is mobile internet.
Yeah, yeah. And also rest of world. I mean, it may not be big in the United States, but it may be
mobile
very
internet for
big.
the rest of the world. Because
Right.
we are seeing Chinese companies, whether it's Xiaomi or others, are going to India, going to Southeast Asia, and America, and to a lesser degree the U.S. And that will definitely accelerate.
Yeah, at my meeting in Tokyo this week, quite a few of the people had Xiaomi phones.
Okay.
But they were from all over, from Singapore and from, India and other places.
Right.
So what role is innovation going to play in this, especially technology innovation, in this growth of China from the future?
The only way China can grow out of this problem is if tech innovation increase and efficiency in
Because
the
actually
process.
a lot of efficiency tightens things down, and for innovation, you almost need to let it loosen up a little bit. and let
Again,
people try new things.
if there's innovation elsewhere and China's good at identifying them and catching up, that's okay.
Okay, okay.
I think what Japan didn't have, China had, was that during the go-go years in the 1980s, most of the Japanese companies that did well were not started by young entrepreneurs.
Right.
They were much bigger, older companies that have been around since the Meiji Restoration period. And for China, because all this are companies that are barely 15 years old, it is a very different feel.
Yeah.
You look at Baidu, Alibaba, and Tencent, they all started in 1998, 1999. And the founders themselves are between 40 and 50 years in age. A lot of them are still quite hungry and on the ball, and that's very different from Japan in the 1980s.
Because I see this kind of hunger for innovation in Japan and hunger in Korea. And other advanced economies where they're unhappy with their innovation capacity.
Right.
I don't really hear that from China yet, but I hear people who kind of complain that the ideas in China are too quick to make money, but not really, advanced technology.
I think there's, in terms of advanced technology, that's happening more in companies like Huawei, Xiaomi to some extent. Baidu, Tencent, Ali have some of that as well. But I would say most startups don't have that. Most startups just execute extremely quickly. But in the process, they become a lot more efficient than their offline counterpart. So they may not be as innovative as the counterparts in Japan or Korea, but they are a lot more efficient than their offline.
Execution is good.
Yes.
Yeah. Okay, let's turn back over to the floor.
I think you're also investing in some Indian companies. I wonder what the similarities and differences when you comparing Chinese and Indian entrepreneurs.
I think the Indian entrepreneurs are very smart and they're also very quick. As a whole, obviously when you listen in English, the Indian entrepreneurs are more articulate at sharing their ideas and so forth. But to succeed in both markets, basically execution is key. We can talk about innovation all you want, but if it doesn't translate into execution, it doesn't really matter. And the top teams from India and China are both very good at doing that. They're just very hungry, very efficient, very quick. Response time, it doesn't take a lot of time analyzing, thinking, just do it, and if it doesn't work, change it, adapt, and come up with the next version immediately. Xiaomi, for example, for the last 6 years, since day one, they release an updated version of their OS, which is Android compatible, every week. That hasn't changed in the last six years. You don't see that happen with any other company in the world.
In terms of execution, which one do you think is doing better? Between China and India? And how they do it differently?
I think India, you face a lot more lack of infrastructure issues, more so than even China. So they are more to overcome there. But I think in terms of execution, both are good. Chinese startups have been doing it for longer, so they're more experienced as a result. Up until 2 years ago, growth hacking doesn't mean much in India. Most of the marketing people in Indian internet companies come from FMCG background. So they come from P&G and Unilever. So they haven't had as much experience dealing with online marketing. But that is quickly changing. So at this time, China's ahead. In 5-10 years, it will be very different.
So Hans, I appreciate you giving your views on that. I want to tell everybody we have Mr. Dinesh Katiyar, who is the founder of Excel Partners, is coming to speak about India in a few weeks.
Great.
So we'll get India in a few weeks. We have Southeast Asia with a serial entrepreneur, Ed Rubesh, who's founded 4 companies in Thailand and is running the international MBA program at Thammasat University as our speaker next week. In 2 weeks, we have a panel of speakers on South Korea, including Reed Smith's head of practice for South Korea, and David Lee, who founded Google Ventures, XG Ventures, and also David Chang, who used to run the Korea IT network. So we've got people coming from each of these economies. This is our time today to really learn about China. I saw a hand back in the back.
And one comment I'll make is that over the last 2 decades, the country's specific model for venture investing and for startup have been quite successful. In some countries more than some of the others. But our thesis over the next 10 years is that you have to be able to go global in multiple countries to do well. Because there's just a lot more devices out there around the world that's internet connected.
And I really loved what you said about having a global team.
Yes.
A
globalized team.
Right.
Yeah.
Right.
You can be in the same office, but come from a variety of places around the world. And you look at, even in the US, you can argue on the West Coast, especially LA and San Francisco, it's a lot more ethnically diverse and more open than almost anywhere else in the US. I've been to several different institutions now. I would definitely say Stanford is probably the most open.
I think so. Go ahead, Charlie.
Do the Chinese innovators that come to you in China, are they mainly coming just from the big cities or from even rural parts of China and throughout in Western?
Good question. I think a lot of them come from all over the place, but they are educated. They go to college in the top cities like Beijing, Shanghai, Shenzhen, Hangzhou, Tianjin, and so forth. We actually had a study to look at a number of Chinese unicorns. A lot of them come from that achieved a valuation of over $1 billion US in value, and a lot of entrepreneurs come from a variety of places in China. But most of them are set up a company in Beijing, Shanghai, Shenzhen, because there's more VCs there, there are more college graduates there, and there's just more IT networks in these places. I think that will change over time, but right now, still, the top cities have 90% of market share.
Jumping all the way to the other corner.
Just a question related to this question. So I guess it's a question about sociology of the entrepreneurs. So in what way are they sort of related? Do they go to the same school? Are they from the same region? Do they share the same culture? That.
Yeah, a lot of them graduate from Peking University, Tsinghua, Jiaotong University, Fudan, Zhejiang University. Those are the 5 probably most popular places. But increasingly, you now see more and more people come from a variety of backgrounds. So it's less tied to that now. Before, it's more concentrated. Now it's more diverse. And that makes sense, because now you have about 500 companies in the internet space alone that's VC-backed, that's listed in Hong Kong or US or China. So when you have that many companies and you have more people coming out of those companies, you end up having a variety of backgrounds. Experience becomes a lot more important over time. Another major difference is that in the US, startups tend to have people come from Stanford, Berkeley, Harvard, MIT, and so forth. So it's more concentrated to the Ivy Leagues and the top tier schools. In China, because the users, what we call 屌丝 users, tend to be more mass market users. And so you take someone who has spent time in a rural area to understand the psychology of these mass market users in China. So while you have, you don't need to have come from a top school, to understand how user behave, so that it's easier for you to build a business that can scale even if you've come from a rural city. So that's why it's quite different. Whereas in the US, usually the early adopters are in New York, San Francisco, LA, top cities, and then trickle down to the Midwest and the South, and different places. In China, the diffusion is slightly different.
I'm thinking about technology and their space program and communication.
Yeah.
How are they driven? I mean, I know they used our launch vehicles back in the 90s and we pulled out. What's going on with that? Are they?
I am not an expert on that. All I know is that they spend a lot of money and time and effort to do that.
A lot of the technology that we talk about flows down from there.
Yeah.
So.
Yes and no. I think whereas here, military spending in universities in the Stanfords and MIT of the world diffuse out for private use. In China, that's less so. Usually, it's started by people who are trained in either US or elsewhere, decide to go back to do something interesting. Or they actively go out and recruit people like Samsung did, talent worldwide, to go there.
Actually, a related thing. I think that here you see a lot of startup ideas that are really technologies looking for a market, or some sort
Yes.
of something looking for a market.
Right.
I'm not seeing that so much
No.
in China. People are very aware of
Market.
business
What's the
opportunity.
demand? What's the business opportunity?
Yeah,
Yes.
right.
Usually in that
Yeah.
sector, the technology's 10,
Play a secondary role.
10, 15 years ahead of what we see
In
in space.
yes, but that's just not how, like Professor Dash said, that's
Yeah.
not how startups
That's just not
are built.
the way the business
Right.
world works.
Because
Jessica,
the opportunity is more of in the offline world. There's a lot of inefficiency. How do you solve that? You don't need a rocket ship to build better retailer with better social network.
Also
Yeah.
the quality. That China, it's not necessarily the best quality that you see.
Best quality of.
Just products in general.
I think you're thinking about the hardware products to some degree. That's true.
Yeah.
But if you talk about like social product,
Right.
it is very different.
Yes.
Yeah, I would argue some of the best social product, like WeChat, is the best in the world, period, hands down, no comparison. That's why Facebook is looking at, even Snapchat is looking at innovations in China for ideas.
This is part of their.
So
drive.
we're kind of getting short on time. One more question, back in the back.
Oh, it's ABC, all part of the same question. As a company, what is your sweet spot? And I'm thinking, first, do you ever work with late startups that have already got a first product worldwide? You know,
Yeah, we'll run to the whole range, from very early stage to something like Airbnb that's already valued at 24 billion. It will become investor.
And then, is there such a thing as a
But we're very sector focused. So we have a sector theme within a particular sector. If we would like something, we're stage agnostic.
Oh, great. And do you have a sweet spot, what that range of investment is?
A typical size is roughly about $5 to $10 million for the first check, and we invest more over time.
And what if a company is near an exit?
Sorry?
What
What about a company that's near an exit?
is your,
Well, we tend to want to have return anywhere between 3x to 5x. So if at the time of exit, we can have 3x to 5x, we will invest now. If it's already going to exit tomorrow, then probably doesn't make as much sense for us.
right, no, yeah.
Okay,
Back to your thing, I think what you will see, I think over the next 5 years, is that more Chinese company will be recruiting product design talent from Japan to join them. I already saw that with Xiaomi and its ecosystems. They actively recruit talent in consumer electronic companies from Japan to join them to design better, more interesting product. And how they're different is that they're very good at selling online, so that you take the best product talent, whether from China or Japan, and instead of relying on retailer to sell it for you, which means that you have to give up a lot of the margins, you have to price the product high enough to have enough gross margin to share with the retailers. These products are sold directly over the internet to the consumer at a much lower prices. So what happens is that you end up building a business that's extremely competitive, very lean. Operating cost for Xiaomi is like less than 5% of sales. For Apple, it's 20%. So they have room to play because they don't need a lot of offline stuff to eat up the cost, and they can pass out to the saving to the end user. So for a phone similar to a Samsung phone, which is priced at $500, you can buy it for $200, $250. So it's half the price and equally good and more localized for Chinese users. So that's how Xiaomi's quickly grow and have people talk about it. So their marketing cost is very low. So it's a very different business model innovation. Now, what we typically see, is this the best product? I see a lot of companies in the U.S. that build great product. They don't sell because they don't have a business case around it. It's too expensive, by the the time it gets to the end users, and people don't end up buying it. And that's unfortunate because all that innovations, and they don't make enough impact.
I'm afraid we're going to have to close on that rather down note about a lot of things that our great products don't sell. So if you would, everybody, thanks. We don't get to hear this very often. Thank you very much.
Had gone through. And this is GDP growth for China versus the US. When I moved to China in 2005, is actually when China's growth peaked at around 10%, 12%-ish. Last 10 years, China growth has actually continued to go down. And yet the numbers I gave you for Alibaba, Baidu, and Tencent, those $5 billion valuations were roughly around here at the peak of China's GDP growth. So how could GDP growth be slowing down, yet these internet companies grew from 5 billion to anywhere between 80 to $200 billion valuation? How could the data for macro be so different from our experience on the ground watching these internet companies grow?
Maybe because a lot of China's growth was in commodities exports, whereas, and those have been going down. We've all heard about the price of oil recently.
Yeah.
Whereas internet is still, increasing, more users, more money being spent on e-commerce, et cetera.
Yep. I mean, that's exactly the answer. And why does that happen? If for anyone who shopped in China in 2005 in a offline retail store, as soon as you bought the stuff, that stuff's yours. Even before you leave the department store, you can't return it. And the store clerks inside these stores, their attitude is that I'm running a state-owned enterprise. You're lucky you can buy something from me. Because, 10 years ago, as controlled economy, you can't even buy it, even if you have money, because you don't have the piao, the ticket to buy. So in that kind of environment, Taobao was born, and Taobao makes it free. You can sell anything you want. They won't charge you for any commission. If you want to advertise and get more business, you have to pay, but otherwise it's free. So in a very short of a time, a lot of people start selling, become merchants on Taobao. And once you do that, a lot of people are selling similar stuff. So how do you compete? On price and on service. So if you buy something from Taobao, you don't like it, within 7 days you can return. I've known Professor Dasher for almost a decade now. I started my career as a VC in the Valley in 2005, late 2004, early 2005, and then we moved, my wife and I, we moved to China in Shanghai in middle of 2005. So my two kids were born in Shanghai. We moved back to the Bay Area in 2013. While I was in China, I was for full 8 years on the ground, made about 15 investments. And most famous one is Xiaomi, which is now the largest smartphone manufacturer and designer in China. When I first invested in Xiaomi, it was in 2010, when there were just 3 guys and a very crazy idea. And today, the valuation is supposedly around $46 billion US. It took them 5 years to get there. And the revenue last year was over 12 billion. And so it was, I was very lucky and fortunate to see how internet in China took off. Some of you in the audience heard this part of my talk before. When I went to China in 2005, Chinese internet users for the entire country was roughly about 100 million people on broadband. And now it's over 700 million people on PC broadband, another 650 million on smartphone. So a lot of changes happened over this 10-year period. When I went to China, there was this little company called Alibaba that just launched a cash-burning website called Taobao for 2 years. And eBay was supposed to be this big giant that was going to be very serious about China, invest a lot of money, and crush this little company. GGV happened to become an investor in Alibaba in 2003. Valuation of the company back then was less than 200 million. And does anyone know what's the market cap of Alibaba today? Take a guess. $150 billion US. They did over $400 billion in GMV last year. So from 170 million when GGV invested in 2003 to 150 billion now. So it took them 12, 13 years and over 1,000x. Over the same time, Google grew their valuation from roughly about 80, 90 billion to 300 billion, so 3x for Google over the same time period. That's just how much has happened and changed in China over this 10-year period. When Yahoo and Jerry Yang invested in Alibaba in 2005, the valuation of Alibaba was 5 billion. Everyone on Sun Hill Road thought these Chinese guys are crazy. No profit, extremely high valuation. Another company from China was listed on NASDAQ in 2005. its name is called Baidu. And in 2004, Baidu had a very small revenue base. Does anyone know how big a revenue base Baidu had when it went public? $11 million in 2004. And what was the valuation of Baidu? $5 billion. So another sign that China is heated, China is crazy, these VCs are inexperienced, they don't know what they're doing. These entrepreneurs are not ready to take on the challenge of managing a $5 billion company. What is the valuation of Baidu today on NASDAQ? Does anyone know? Take a guess. Not that big. About 70 billion. So it went from 5 billion to 70 billion in a span of about 10 years. Another company from China got listed in 2014. This time it's in the Hong Kong Stock Exchange. And that company is called Tencent. Back then, they were doing stuff, it's called QQ on PC, and you play QQ like a AOL Messenger or ICQ. Does anybody remember ICQ here? There you go. So they used a company called CICQ, and they got sued for IP infringement. So it changed CICQ to QQ. The valuation of QQ back then was roughly 3.5 billion. A lot of people thought that just overvalued. And the market cap of Tencent today is about 200 billion. So these are based on real numbers, and the revenue of Tencent and the net income of Tencent today pretty much is in a similar size as Facebook. Facebook has the rest of the world. Tencent really only has China, yet in terms of market cap, revenue, and net income, they're very comparable. So 10 years ago, if anyone said the number one internet company from China can be similar in size of the number one internet company from US that has the rest of the world, everyone will laugh, including those of us who are on the ground. None of us thought that Alibaba and Taobao would be around $150, $200 million in valuation today. So the kind of changes that we have seen over the last 10 years in China is dramatic. What does that mean? That means that the lesson that China gone through, in my mind, is not China specific. Any country where you have a favorable demographics kind of trends, where there are more people who are young users, and internet penetration rate is rising, and urbanization is also happening, GDP is growing, then that country will go through similar challenges and opportunities that China presented. So in my previous talk, I've always said that India is a country worth looking at because over the next 10, 15, 20 years, it will go through similar kind of pains and opportunities that China had gone through. The solution to solve those problems may be different, but the principle behind it will be very comparable. The topic today is China Entrepreneurship Update. And it's specifically, Professor Dasher want to hear about how, as the economy slows down, what does that mean? So this is actually one of an internal document that we shared at our quarterly offsite amongst the general partners in January. So as the stock market goes into an extremely volatile time period, and in January and first half of February, a lot of tech companies in the US that's listed on NASDAQ and NYSE, the valuation went down by anywhere between 30% to 50%. So in that kind of market, when some of the people are panicking, and yet these venture-backed companies are still burning cash and growing, what does that mean to our portfolio? So these were the issues that we thought about. Should we be more aggressive or more cautious during this time? We went through downturns in 2000 as well as in 2008, 2009, and the recent correction in 2015 and 2016. So being through this is our third time now. And some of us, like myself, went through the Asian currency crisis in 1997, 98 as a very young venture investor. So for some of us, it's the fourth time we've gone through it. And every time you emerge from this kind of period of uncertainty, it's those who were very calm, very thoughtful about what they're supposed to do, ends up investing more, backing better companies that had an easier time recruiting people, had an easier time raising money because they are more differentiated, and had a field where they're less competitive environment because not a lot of crazy money went into funding their competitors. So contrary to what people may believe, whenever there's market uncertainty, whether it's micro or financial, market related, it actually is good for us and the startups that are more experienced to go through this period, become stronger, and once the funding environment gets better, they emerge, become a lot stronger in process. Okay, so this is the sort of the size of the major regions around the world and their growth rate. So looking at China as a single country, it has 11 trillion in GDP. When I went to China in 2005, GDP was roughly around 1 trillion. So in span, it's 11x'd. And it's amazing what a country has